We have, is this working, Ken?
Yeah,
Right.
you're on.
My avatar isn't there. On the news front, we, actually my firm is not doing on this Monday, it's actually not doing its typical recap of the week. So
why not?
I did this, well, because we have an offsite. So, but I did this anyway because I'm a creature of habit. So as you all know, what I usually do is I focus on stuff that's happening in the regulatory world, then technology, then down to company level stuff. On the regulatory front, the two things that I thought were interesting. First is, some of you know the woman Elizabeth Warren. She is the Harvard professor who is going to be, I guess, is going to be the advisor, the chairman of this new Consumer Finance Protection Board. That's an agency that was created to help people consumers. This was part of the Consumer Financial Protection Act that passed earlier this year. There's been a ton of controversy about her because she said a lot of things that some might attribute as anti-industry. Mm-hmm. And when you, next to the insurance companies, it's amazing to me how much the financial institutions are capable of stopping just about anything from happening if they want to, given the amount of money that they flow into lobbying and Congress. So she is being appointed. I mention it because this bureau, like a lot of government agencies, is typically what I would have expected to have not a lot of teeth. With someone like her in it, it's probably going to become very activist. And the credit card companies, who, while they have taken a lot of losses as a result of the drop-off in the economy, they're still very profitable businesses. So she bypassed, or Obama's decided to bypass the Senate confirmation process and just have her go directly what they call a recess appointment. So she'll be there for the next couple of years, and we'll set the groundwork, which is what happens when you're the new head, when you're the head of a new organization. You pretty much set the culture for what's going to happen. Frankly, what I wish had happened was something similar to this with the SEC, because the Bernie Madoff scandal is, of course, really gone, and no one remembers it anymore. But my own view is that the legacy of what the SEC failed to do and how badly all of us now think about the SEC and its oversight is going to be a stain on the United States capital markets for probably until all of us are dead and buried. I just read a recent study that people who got into the market in like 99, 2000, right as the market was collapsing, so people, let's say under 40, have a very different perspective of the equity markets than those who are 45, 50, 60. Those people, the younger people, have very little faith in the capital markets. And part of that is because the internet bubble wiped out a lot of the money they put in. And then, of course, we had the Enron and WorldCom and Tyco scandals. And then we had the housing bubble, which then collapsed all the banking stocks. And you heard about Bernie Madoff. And something that is already, news comes in and it disappears. Someone like you, Brian, probably realized that if, 3 days after a story's covered, people have forgotten it. But remember in May 6th, the flash crash where the markets dropped 1,000 points? And companies like Procter & Gamble were quoted as trading at 0, right? Okay, this is all computerized stuff, right? We all know what orders came in, what orders came out. It's all software code. So tell us where the bug is in the system. And after a whole bunch of Senate inquiries and whatnot, everyone on Wall Street just is shrugging their shoulders and say, we don't know.
Fat finger.
What'd you say?
It was a fat finger. Some guy put 16 billion instead of 60.
Yeah, and so, right, there's a rumor, there's a fat finger, that there were a bunch of trades. Somebody said several hundred million trades, bogus orders were placed. And what has come out of all this is that the markets have really become more of a game for hedge funds than a traditional place, let's say the Warren Buffett type of investing, where you find a company, you read the 10K, you do some peer group analysis, and you say, this is a good long-term stock to hold. What I think I'm fairly sophisticated when it comes to investing, and after reading as much as I could tolerate about this, I decided, you know what, there's a lot of stocks I'm going to avoid. You can basically, with the exception of P&G going to zero, which really needs to be explained to us, you can basically, I think, decide at this point that if you're in a company whose stock price, let's say, has a market cap less than $5 billion, anything can happen in an average day to that stock.
The joke around the office after that fat finger thing was, now that there's so much heat on Goldman for that fat finger and dropping it 1,000 a day, we said, well, I guess it's okay that they drop it 1,000 a week, because the next couple weeks it was 200 down.
Yeah, well, like anything, right? When something is a shock,
yeah, it's
a lot harder to deal with than when it's gradual. For instance, I mentioned Priceline a few weeks ago as a stock that I was, fascinated by. I mean, granted, it did have almost a 50% return on equity in 2009. I mean, literally all the equity it has, it got half more of that in 1 year in terms of net income. But still, that's an example of how the markets work now. That stock was trading at 180 or so in July, and now it's trading at 340.
Also, I don't know if people know this, one of the hottest stocks of the market these days is Netflix.
Yeah, so you're talking about Netflix, another one, right? Was trading, I think, 9 months or so ago, maybe even less. It was trading at 45 bucks a share, and now it's at $145 a share.
Can I give the ultimate evidence that it's a game that as completely unloosed from fundamentals? Jim Barksdale just put in with some investors $300 million to make a completely straight, like ruler straight, fiber optic line from Chicago to New York to shave off 3 milliseconds. And it's basically, they've said it's profitable. So companies to get a 3 millisecond advantage, trading companies are willing to pay 8 times the cost of the bandwidth for the 3 millisecond later bandwidth, which means it just screams out in giant letters, 500 miles wide, front running. They just want to make sure that their trades are 3 milliseconds, 3,000th of a second ahead of the next trades.
Time is money.
Yeah, and then, by the way, that, like everything, it's been moving in that direction. First, people wanted to have their data centers away from the New York Stock Exchange, just in case something happened in New York Stock Exchange, it'd be safe. So and then they realized, well, wait a minute, the further away your data center is, right, you introduce latency in the trades. So now, if trying to get in New York City a space for your servers is virtually impossible, right? And so there's those people who will invest in, and by the way, the hedge funds, as much as they had a hard time in 2008, they're back again. Lots of money is flowing into them.
Well, and the building where all this stuff is, like 55 Broad Street, I think has gone up 20-fold in 5 years because the rents to get your servers and your racks closer to where Wall Street is happening.
So on the economic front, though, I told you we as a firm follow this very closely. We like to know, particularly as we're moving into Q4 in a few weeks, our budgets for next year are going to start being set. Our hiring budgets, our CapEx budgets, our marketing budgets, and we like to know, well, how's the economy going to do? And even now, I can't figure out, and neither can my partners and I figure out, what is the market, how much is GDP going to grow next year? What is the consensus? This past week, what I saw was a lot of people saying the likelihood of a double dip, meaning going back into negative growth, has gone from 50% to 60% for next year. And of course, there's a large group of people saying, no, that's not going to happen. Interesting, though, people connected to Wall Street, economists connected to Wall Street seem to be touting that the economy is going to grow. And those more removed from Wall Street say the economy is going to shrink. And frankly, I think Wall Street has a pretty good reason for wanting to say the economy is going to grow because bullishness always helps that industry.
But there's another reason that they're both right. The economy will grow in dollars. This is my prediction, but my reasons of these I think are sound. In dollar terms, it will grow. But if you look at a basket of currencies that's non-dollar, it will shrink. So the U.S. economy can grow 2%, but it can actually shrink 8% if the dollar's depreciating 10% against a basket of currencies. So they're both right.
Yeah, and your point, Alex, about currency, frankly, I think of all the things right now that our economic wizards and government should be focusing on, it's currency. And there is this, beggar thy neighbor policy that I think a lot of you probably at least know casually, where countries like, even though it's long-term not good for them, they like to have a currency that doesn't really reflect the real robustness of their economy. And they like that because then they can export goods, and those goods are cheaper for the people buying them. And so in the long term, while that introduces inflation, in the short term it looks good. And if you're on an election cycle in the next year or so, you're probably going to want people to feel like, hey, our economy is growing and doing well. So on the housing front, in the economic side of things, some of the reasons why people were saying we're going to be still in a depressed state, housing is deteriorating. Now it's hard to know if we're just finally flushing out all of the badness that happened in 2008, or if we're stagnating. About 95,000 homes went into foreclosure in August. That was a pretty big increase, about a 25% increase from July. You can look at it two ways, and you always can with things in economics. You can say, well, this is a final sign that all those homes that were hanging on are going to get priced where they should be, get foreclosed, and we'll move on. Or you can say, well, people who we thought were going to keep their homes aren't able to, and the economy is slipping. Since 2007,